Hey, I'm Mindy Kniss. This is the Daily Rage. It looks like a bad day in the markets. Pretty much everything on my radar screen is red. So, other than cocoa, it's the only holdout. Anyway, let's talk about the FOMC 123 trade. Tomorrow is the big day. Let's open this up because you're going to use a 2-minute time frame. And you can do this on any of the indexes. I would say just choose your favorite. And let's say we're just going to make up an example. Let's say that the initial reaction, I'll put some lines on our chart so we can see what we are talking about. Let's do some vertical lines and let's stay in the drawing mode. Okay, let's say that this is a pretty nice red candle. Let's say that right there was the initial announcement, and that is the time that the initial announcement comes out. This is the first reaction in this case would be down. Big red candle, pretty obvious. Then you're going to count that as move one. Move two would be in the opposite direction. So whichever way it goes initially, you're looking for an opposite. All right, so down one, up two. And then what we would want to look for is after this point right here, we would look for going short. Now, in this case, and obviously it's way easier to do this in this situation where I'm just walking through an example versus real time. You don't know what's going to happen next. So, taking all of that into account, what we want to look for at this point is a continuation of the first move. So, if the move first was down, second was up, we'd want to look for a potential short. In this case, that would have been a really nice one. We could have gotten short and just worked it down from this point forward. Now, let's say that the initial reaction is up right here. Let's just say that that's the FOMC time of the announcement. Move one is up. Then we'd be like, okay, well, that clearly is down two. We would be looking for a continuation of the up. In other words, an entry on a long position. And somewhere in here where it kind of leveled out and stalled, then it went up from there. Now, in this case, maybe you could have gotten a little bit of profit, but depending on if you moved your stop into profit or where your stop was set, clearly there was not much follow through at all, and that wouldn't have been the best trade. Now, with FOMC, you never know what you're going to get. Sometimes there's amazing follow through like this. Oh, yay, let's just go and go and go. Woohoo, awesome. And sometimes it's like up, down, up, sweet. I went long and then nope, didn't give me anything. That is how it goes. 1, 2, 3, you're looking for whatever the initial reaction is. Second move is opposite. Third move is a continuation of that first move. And the third one is where you want to look to potentially enter long or short. As a heads up, as of this recording, there are just a few hours left in the Apex 80% off half price reset pass in one day sale. So if you do still want to grab some of those discounted accounts prior to that deadline, get in there and get them quickly. I'll see you tomorrow for a recap of the FOMC. I'm Mindy Kniss. Thanks so much for watching.